at today's market action. I tell you, we've got a lot going on. Let's bring in Yu-Dee Chang, Ace Investment Strategist, Chief Trader. Mark Newton, standing by on the floor of the New York Stock Exchange. Alan Nuckman is down on the CME. Alan, I do want to start with you. And one of the things that I think is fascinating here is, as we're watching market activity and volatility, which David was just speaking about, is the fact that you have, at least on the equity side, we didn't react. There was no positive reaction on the equity side to this news report that are reporting that the House Republicans are going to take a deal to the floor tonight.
Well, it may be the sell the fact type action. We've moved up 4% over the last couple of days. You got to remember, the S&P yesterday was only 1% off the all-time highs. The Nasdaq made new decade highs. So you might see some people taking some chips off the table here, just in case there are some last-minute hiccups. You know, people seem to be more confident. We're only down 0.5% on the day. You know, the VIX has got a little bit of action in it, but it is still significantly lower than it was last week. Last week we had a reversal where it made new highs and closed lower on the week. So that was a sign that things were coming together.
Yu-Dee Chang, are you a buyer or a seller in this market, and why?
Well, at this very second, I'm not going to do anything, but basically, I'm a buyer of the market. I think this is all drama. Basically, the market, as well as myself, is saying that this shall pass, right? They will come to a resolution, whether it's temporary or not, and the market is going to move higher based on the current economic condition and based on the favorable Fed support of the market.
Mark, I want to bring you in. I want to point out viewers to the Dow. We are actually, and here we go again, as the numbers settle, and it always takes a few moments for the numbers to settle on the Dow. We're down 133 points, so we're closing at session lows. Why am I not seeing the reverse of this, Mark, considering that there was some movement in Washington in the last 30 minutes? What's going on?
You know, the market's still been up 4 out of the last 5 days, and so it's natural to give a little back. The bottom line is you're seeing these intraday swings on hopes that the deal is going to get done, and then on the failure to get done, we see a little bit of a sell-off. But the market still acts fairly resiliently. And if you look over the last 30 years, on times when we've had government shutdowns that have lasted 10 days or greater, the average pullback has been about 4 to 5%. And if anything, we've seen the reverse of that. The Dow is still up 400 points over the last 4 to 5 days. So we're seeing a lot of resilience.
Hey, Mark,
interest rates have started to back up a bit.
We do have Intel's numbers. Joe, what is it?
Right.
Hey, David, that's right. Intel's numbers are in, and it is a beat on both EPS and revenue, coming in at $13.5 billion, beating the $13.46 billion that was estimated. EPS coming in at 58 cents per share, which is a beat of the 53% share. Right now, it's trading about 0.5% up in late trading. And taking a look at a little bit more of the numbers, their Q4 outlook is $13.7 billion, which would be an increase on this third quarter result that we have right now. And we are also looking at a net income, David, of $3 billion.
Okay, I want to go back to Yu-Dee Chang, because Yu-Dee, you've done something interesting. You've looked at the earnings in the past, and you have found a very interesting correlation between the earnings and what happens with the stock price later on. It might be better if they missed the expectations, right?
No doubt about it, Dave, especially on Intel. They actually have an inverse relationship, believe it or not. Out of the past 32 earnings beat of Intel, my God, that's what, 8 years of it. The stock, following the next 30 days, tend to be down about 0.7%. But over the past 23 earnings misses, over the next 30 days, Intel, on the average, was up about 4%.
Let me just put a fine point on that. Intel, the stock actually does better when it misses expectations, correct?
Over the next 30-day basis, yes.
Well, at least for now, the bid and the ask, it's trending up just a little bit in the aftermarket. Of course, we're going to have the Chief Financial Officer coming up later on in the show. Alan, I want to go back to you on something else. Again, as we're waiting for Yahoo earnings, we may have to interrupt. But, Alan, at the same time, for the S&P 500, more than 60% we are looking at outlooks for the third quarter numbers revised lower. Of course, they're going to beat.
Well, that's what we've been doing every quarter after quarter. So, you know, we talk so much about all these crises, all these self-inflicted crises that we've had in Washington and in politics. But look at the tape. You've got to understand the resiliency of the market here. And we do this every quarter where they lower the expectations, we overachieve, we make new highs. So I'm not smart enough to be the guy that's going to pick the time that that's not going to happen. So I'm looking at these markets continue. I like Yahoo to hold that $30 level. That was the target when it's trading between 10 and 20 for 4 years. And in looking at Intel, you can lean on 22.5. That's a halfway point of this year. So look to be buying against some serious support levels for the overall trends that continue to the upside.
You know, Yu-Dee, I do want to go back to you on Intel's numbers again as we're watching kind of the numbers, subtle investors kind of going through the numbers and figuring out, looking at Intel is actually at this point, popping up. I mean, we're seeing a little bit of a boost on it. It's at 23.90. That's the ask. The bid 23.85 right now. So we're seeing a little bit of a positive reaction, and it looks like we're getting some more numbers coming out as well.
Yeah, I think on an overall basis, if you think about it, Intel is still behind its curve. I think the good news for Intel is that the so-called contraction is slowing down. That's the positive side of it, but they're just behind the curve.
Okay.
PC sales are just not as good.
That's why I got to interrupt, because we do have the Yahoo numbers. Jolene, go ahead.
Hey, Dave, that's right. We have Yahoo numbers. It's a beat on EPS, 34 cents per share for the estimated 33% per share, and the revenue came in at 1.14 billion, or the 1.08 billion is the ex-TAC number, which is a meet on the estimated 1.08 billion, and shares are up about 4% right now in late trading, David.
Okay, once again, some good numbers coming out on Yahoo. By the way, a little later on, we're going to have specifics on what's happening with Yahoo from a top analyst who's going to be looking at Alibaba and all their numbers. But Mark Newton, I just want to take it back to Washington for a second here. The question of a default. We've seen that, heard that word default used so casually over the past couple of days, but specifically, a U.S. default would only happen if the United States Treasury stops paying bondholders. That's a default. There's no other definition of a default. Is there any expectation that that would happen?
I don't really think it's going to happen, honestly, Dave. I think the two sides both want to see things resolved. I think it will be resolved. There's a lot of theater that typically happens before these things, but there are a lot of things the Fed can do in the Treasury to really prevent a default from happening. And so, I don't think we're quite there yet. And if anything, they can prioritize the different payments and make sure that everything gets resolved. For now, I think it might be another couple days of drama. Everybody's really questioning whether the 17th is a true day or whether it really gets extended until the end of the month. And so that's the real key. For now, I mean, you continue to see good strength in technology. Of course, with the recent earnings, industrials, energy, these sectors just simply haven't broken, whereas the defensive sectors continue to be weak. We've seen the backup in interest rates over the last couple of days, and that's hurt some of the utilities and the builders and this and that. So those continue to be sectors to avoid.
Mark, thank you for bringing up technology. I want to go back to Yu-Dee on something as we've been kind of parsing through Yahoo's number. Paid clicks were higher, at least a good 3% jump on paid clicks. Again, Yahoo has been making inroads, Alibaba aside, which is crucial, Yu-Dee, but they are seeing, again, a little bit of advancement when it comes to mobile and paid clicks. I mean, this seems to be a positive for Yahoo, but you tell me.
Absolutely. That was the critical two things. One is all about mobile ad, right? So that is what people were looking at, and that's probably is going to advance the stock. And the second was Alibaba. They have, what, 28% share stake in it. If they come out with this IPO of $6 billion, that's going to add a lot of valuation to the Yahoo stock itself. So you're absolutely right. Right now, it's all about mobile ads, and it's all about Alibaba.
And we're seeing the stock up 5% almost right now.
Yeah, I can see that. It is trading up.
Congratulations to Yu-Dee, as he called that one. Go ahead, David.
Alan Nuckman, what's happening with the traders of the CME as we're closing out there?
Well, it seems kind of quiet. Again, everybody, the best thing you can do is control risk. You don't know what's going to happen. The beauty of the futures markets, they're open nearly 24 hours, so you can put in a stop loss and a profit order and execute your trading plan. So that's the number one thing I can recommend to people is make sure you're in a strategy that you can execute your trading plan just in case a worst-case scenario happens, that you're covered and then you can exit.
Very good advice. Alan Nuckman, thank you very much. Yu-Dee Chang, always a pleasure. Mark Newton, thank you so much for stepping up. Appreciate it. More on Yahoo, by the way, after CEO Marissa